This is, wait for it, episode number 50 of Ambition Today. And today we are joined by none other than Ramphis Castro. Straight from episode 1, Ramphis is the managing director at ScienceVest. This is Ambition Today.
These are the entrepreneurs, creators, investors, and builders who ambitiously change to the world. Explore the hardships and heroisms of everyday life while we reveal the key moments to leave behind a lasting legacy. This is Ambition Today with Kevin Siskar.
What's up, world? I am Kevin Siskar, and you are listening to Ambition Today. Make sure you subscribe to the podcast in your favorite app: Apple, Spotify, Google, SoundCloud, Stitcher, Breaker, even our own website. Really, wherever you listen to podcasts, we're there. Big news, for as little as $3, you can now join the Ambition Today back channel and hear from every guest the single greatest piece of advice they've ever received in their life. That's siskar.co/A-list. In case you missed it, the last episode we talked to Nir Eyal. He's the author of Hooked. But today we are joined by Ramphis Castro. He's the managing director at ScienceVest, a new kind of seed stage fund that believes that the most revolutionizing companies in the coming decades will be science and frontier tech based. Ramphis, welcome to Ambition Today.
Thank you for the show. This is great. Great to be back.
We're here in New York on 5th Ave, uptown from our normal location at Next Jump. We're over here at Loeb NYC at 56 and 5th. I'm really excited to have you on here, Ramphis, and I've kind of been holding out a little bit because this is episode 50 of the podcast, which is crazy. The first episode was recorded with you in August 2015, and a lot's happened over the last few years. You met Obama for one of them, for one thing.
That's right. That's right.
And hopefully over that time, I've gotten better at podcasting.
Just a little bit. It's just incredible. I actually remember part of the first conversation, right?
Yeah,
podcast.
I had literally just bought mics on Amazon, and I was like, "They're in my bag. Should we record it?" And you were like, "Yeah, let's do it."
Just get started. Let's get started, right? Practice what we preach.
Yeah, exactly. And so on that episode, I actually listened to that episode this morning on the train ride here. We talked about the downfall of Zirtual. Google had just become Alphabet. NBC invested in BuzzFeed. Feels like forever ago that was news. But here we are today. So thank you for coming back on the pod.
No, it's great to be here. And it's just funny how some of those stories, right? I mean, things I imagine, like we talked about there, Sergio, like why these things happen. You know, some things, a lot of it has changed, but also a lot hasn't really changed, right? When you kind of talk about companies and how companies get built and, you know, some of the bad advice that gets thrown around and how those first founders, you know, you and I, you know, we still see that, you know, every day.
Yeah. And, you know, I remember what we talked about with Zirtual was they basically, up until midnight on Sunday, they kept trying to fundraise. And then they missed the deadline. Texas had a law, and so they had to shut the whole company down. And Monday morning, the website was gone and no one knew what was going on. All the employees were fired, essentially. And I think, I can't recall the company, but that just happened again recently where someone fundraised right to the deadline. And it was a topic, you know, three and a half years later, again, why not be a little bit more, you know, practiced and cadence with the shutdown of a company. But this episode is not about the news. This episode is about you. And so we are going to go through the journey of Ramphis Castro. So let's take it back to the beginning like we always do. Tell us a bit about where and how you grew up.
Wow. Let's take some back. So I'm originally from Guayama, Puerto Rico. And so Puerto Rico, who doesn't know, out in the Caribbean, I always call it, you know, middle of nowhere in Puerto Rico because Guayama is about an hour south of San Juan, which is sort of the main city. And I think when you and I talk, it's a lot about, you know, I think Guayama is to San Juan, similar, I guess, to what Buffalo is to New York.
Yeah, maybe. That's a good analogy.
You know, it's sort of there and there's a relationship, but clearly, you know, it's different, right? I mean, everything about it is different. The people are different. Communities are different. The experiences that you have there are different. In my case, you know, I grew up close to the beach. In the south, there's, you know, a few towns, you know, fairly kind of middle class. My mom worked in a customer service rep at the public utility company. My dad was working in manufacturing on quality assurance for doing aluminum cans. And I have three siblings, have three siblings. You know, I'm the third or fourth. And we have 4 or 5 years between each of us, right? So everybody got their chance to just sort of be the kid, but then, you know, there's also this, you know, friendly rivalry in some regards, and others, you know, we take care of each other as well because we have, you know, other experiences, and we had the opportunity to kind of share some of that. You know, so that experience there is just, you know, you don't know what you don't know, right? Like in Guayama, right? I mean, if I would have thought that kid for us hanging out there, all the stuff that we're going to talk about, crazy, because you got to keep in mind, everything, obviously Spanish is native language, right? There's no English anywhere. It's not a thing that people typically just know. Even to this day, it's not, you know, just access to the language itself. It's huge.
When did you learn English?
So, you know, I lucked out because my mom, and I actually got the updated story here, but part of kind of where my mom was working at the time, there was a big manufacturing boom in the 50s and 60s down south. And so a lot of these, you know, US-based executives who had to move down to Puerto Rico, and they ended up building one particular school for their kids, and my mom having to hustle sort of her way to get my older sister into that school, even though we obviously couldn't afford the school. She had kind of a relationship. She was sort of the executive, part of the accounting team as part of the executive, so she was really like, trusted, and they wanted her to be happy, so they made us as part of like supporting kind of her, and my sister sort of snuck in there, which allowed, you know, my older brother to sneak in there, and then sort of made me sneak in there, right? So it's like all the kids of like, you know, the executives and the doctors and stuff, and then just me. And obviously that's the, and it's a fully native, I guess, native speaking English school, right? So the only of its kind in the South at the time. That had sort of that reputation, which allowed me to, obviously, since, you know, pre-kinder, it was in Spanish. In English. So everything about it was, you know,
and that's rare for growing up in Puerto Rico.
Oh yeah, I mean, for growing up in Puerto Rico broadly, like you'll see a lot of that from people sort of in the metro area. Yeah. So you'll see that, like, typically when you talk to a Puerto Rican, they'll be either native born in the U.S. or they went to a private school in San Juan. Right. So if you have somebody not from San Juan be professionally active within almost any sphere, and they're outside from San Juan, they'll probably just lucked out. Either they went to my school, which is super tiny school, so it's like a handful of people that will spread out, or they lucked out in the public school and somehow managed to get into college, right? Because, you know, the college going rate, it's also not a thing that's sort of common for people to even think about, right? Just to contemplate. I think the idea of going to college. Obviously, for me, I looked out again. My parents had the experience to go to college. I mean, my mom grew up in a, you know, farm, you know, no shoes, kind of, you know, walking 4 miles, like those kinds of stories. You know, my dad, you know, public housing, right? And public housing was an upgrade for where he grew up in Santurce, right, which is in San Juan. So, you know, having, you know, running plumbing and all those kinds of things. That's sort of the time that they grew up, and they both were South because of sort of that process. So my dad from San Juan South, and my mom was in Patillas, which is sort of a, you know, rural agrarian side of the equation.
So were there any entrepreneurial influences, or does the lifestyle of the entrepreneurial influence, or, you know, what do you think in your childhood kind of conditioned you to be drawn to that later in life?
Great question, because I thought about that a lot, and absolutely it's my family, right? In terms of my mom, I mean, there were employees their entire lives, but they always had a side hustle, right? So, you know, I remember, you know, as a kid, you know, there was you know, these sort of candy stores. And instead of, you know, buying candy, obviously we couldn't afford to buy candy. It's not a really thing. You know, my mom would buy candy in bulk because I knew like who the kids and you know, what they liked. And I'm like, okay, this is the kind of candy we're going to buy, right? The sneakers and then she bought it in bulk so that we can kind of undercut the pricing on those candies from like all the other regular stores. So like we would, you know, make a bunch of money from well, not much money, but like at the time,
you make some money.
At the time, and I'm not that old. It's just that, you know, any money that was my money, it was like a lot of money. So we got like, you know, let's say like 50 cents, you know, profit for like the day, and 50 cents like a long time. I'm just like in my 30s, but still in Puerto Rico, you know, pricing still it's a price difference. Anyways, you had that experience of, buying something in bulk, selling it, figuring out the strategy.
Which is like, I think there's a lot of adults that don't even understand that. And to be taught at such a young age, by your mom that like literally you could buy something for less money, sell it for more money.
Yeah.
Like, that's a powerful experience.
Yeah. I mean, and I have multiple of those. I mean, she made us, we didn't have to, but I don't know exactly why she does, but, she would buy M&Ms and say, you guys we're going to Disney, but you guys have to pay your own flights, right? And we're like, all right. And she would be our first investor. She would buy us this, fundraiser M&Ms, and she would have us go door to door sell, but she wasn't with us, so she would stay back, like in the car to make sure that we're like safe. But we're like on our own, kids to be like, hey, we got M&Ms, which is super tense. Someone's gonna open the door and be like, I get lost, kid, or whatever. So I had that experience, and then when we made money, we had to pay her back first, which is not investments actually, but like that experience of, you're not, you have all this money, you're like, oh man, they made all this money. It's like, no, here's the problem, I paid my mom back.
You got a bank loan.
Yeah, and then I got to pay it back. And I did, typing in school because I lucked out in private school. I had a chance. I knew how to type, QWERTY keyboards really fast. So I would type up people's reports because they kind of missed deadlines, and I would charge them, right, sort of services, whatever. And I didn't know that was entrepreneurship, just to be clear. It's not like, let's, do, no, it's more like there was a need. It'd be great if you guys can make money. And we're for all for it. We actually had a lawn, it's like we're not like a cut lawn kind of business with one of my neighbors. Right? Yeah. So like his grandma, would say, hey, will you guys, clear our lawn or whatever, and we would get like 50 cents total, right? Like between the two of us, right? So those kinds of experiences, I had a lot of those, which I didn't know was uncommon. We sold, there's this, it's like a frozen treat, It's like you used to have like strawberry syrup of some kind, and you mix it up and you just put it in a little cup and you freeze it, and then you sell it to kids, right? Because it's, it's hot, like 80 degrees all day, every day. And after, everybody's out playing, they want to buy stuff. And because we also lucked out, and the neighborhood that we grew up in, there was a favor of some kind as well. I mean, this is my parents always like I guess connecting or being helpful to others, and I also learned that as part of the business. Where we lived, the other kids, they did have some money, right? So they would come to buy.
So you had a good market. You're learning all the things. You're building your pitch deck out here.
Yeah.
All right. So what comes next? How do you cut your teeth? Right. I know there was a stint at Microsoft, right?
Yeah. I mean, so fast forward. I lucked out. So obviously in Puerto Rico, just as in a lot of outside cities, it's like you can be lawyer, doctor, engineer. I was great at math and science. I had I actually switched over to public school. Because we kind of ended up not being able to afford it. And that public school ended up going to a special math and science called CROIM. And then from there, I decided, well, I'm going to go to university, obviously. So I applied both, one to MIT and then to the Puerto Rico Engineering. Got accepted at MIT, had to pay his amount, decided not to go because I didn't want to get that burden unloaded on my parents, stayed at University of Puerto Rico at Mayagüez, which, everybody, they said everybody that goes to Mayagüez goes to NASA and all the engineers and all this stuff. I was like, I want to be an astronaut, so let's do that. How do you do that? I decided to go to computer engineering, which is how I get to Microsoft. Like the Microsoft story is that my school also lucked out, right? In terms of, it happened to be one of 50 campuses globally that Microsoft recruited at the time physically. So there's like thousands and thousands of universities. Everybody wants Microsoft to come. At the time, Microsoft is like, think of it as like the Airbnb, Dropbox, Google now. It's the place, right?
Yeah. It's the hot company of the time.
It's the hot company. This is, late 90s, early 2000s, right? And that was that was the place. That was the only place I wanted to go because that was the best. I obviously we managed to have a computer. It was like the screensaver said Microsoft, so my mom knew what it was. So that's why I always wanted to go there. And so they ended up recruiting. Some of the people that were recruiters there happened to be guys that had helped. I was an open source admin at the time. Microsoft was clearly the dark side then, but I've always tried to figure out just from my home, like think for myself. So I was like, I want to see, Right? I want to see. I mean, they're clearly the best. Why they're the best, and we're out here on the open source world doing all this stuff, fighting. Like, I want to see. So that's kind of how I made out there. I worked on the Office Shared Services team in Redmond and working on the user experience design team, which became the Windows Live team led by Julie Larson Green. She recently left Microsoft and decided, the experiences was phenomenal. But I thought it was going to be an engineer, but as well be an engineer back home. So I kind of decided to come back. Yeah. And from there, worked on consulting at a company kind of Puerto Rico. And then I built sort of tech companies, right? And I can kind of keep going.
Yeah. So essentially, it sounds like you won the English lottery. Then you cut your chops as an engineer, got a job, an amazing experience at Microsoft at the time when they're super hot, up and coming, and those experiences can be really powerful just to witness how the great companies are built, right, from the inside out.
Absolutely.
And then I know you had a stint.
I have a story there for you. I don't know if I've ever shared it with you. So, at Microsoft, one of the things that they emphasized a lot was through, obviously, weird experiences for being there, but, all these ideas around, flexible schedules, open, like, not open offices, like private offices, having a couch and just like taking a nap when you want, like all this stuff was crazy to me. Coming from Puerto Rico, right? Just crazy because people in suits, back home, going to work. And one of the things is that they really pull out all the stops to try to recruit you to be out there. So, at my internship, they took the ones that were graduate, the seniors, to try to recruit us to Bill Gates' house, right? So they round us up, right? So it's, there are thousands of interns. They only round up, about like 50 or 60. They just sort of the graduating seniors, top of kind of their group, and they took us out to his house just to kind of hang. Right. And while we're there, all the senior executives, from Microsoft are there as well. And everybody's like chatting. And then like, Bill Gates comes out and these guys are like left in the dust. Right. And everybody's like, just hang out. And we're there. And he said, the thing and it's been quoted, he's kind of says it over. Now I know it's like something he just says over and over. But at the time it was like, the biggest thing, I want is that, the biggest asset that we have is, leaves every evening and comes back every morning. Right, in the company. And I was like, wow, man, like these guys really think we're super valuable. And that sort of messed with my mind, right? Because I was like, coming from Puerto Rico, I'm like, there's a hustle here, right? Like, there's like, why are you doing, all this stuff?
What's the catch?
What's the catch, right? But that still worked, obviously, for me to be like, oh shit, like this is going to be really great. But I had a chance to make me hang out and obviously ask a question at the University of Puerto Rico. I was the only one from my school there.
So you got the box checked on Bill Gates and Obama.
Yeah.
Nice. Well,
I have a Colonel Sim story for you, but that's later.
All right. Well, the next question I wanted to get to is because as you played a really big role as an ecosystem developer, fast forwarding again, in Puerto Rico, right? And really building the tech ecosystem. You led Founder Institute down there and Parallel 18 and a few other things. Take me through what leads this transition from, Microsoft developer to I want to help the whole ecosystem overall in Puerto Rico.
Yeah. So when I returned, working consulting, the thing that was sort of bugging me, which is, I guess it's weird to think about just looking back, but basically, I obviously the amount you get paid in Puerto Rico is sort of less. It was still more than both of my parents combined when they retired, but still felt like less, which is Gates told you where the ego was then, right? This is not good, right? In terms of not being thankful and grateful for having the opportunity to serve and help. You also, which I had, but you also wanted the numbers.
You're hungry.
Yeah, to basically match what you think is what you're getting somewhere else, and without knowing that there's a difference in lifestyle cost and all this stuff. And basically, my dad said, I'm an engineer by training. In Puerto Rico, you take a bar, as if you're a lawyer, you also take a bar to be a practicing engineer to be able to serve the public, which is a U.S. Everywhere in the U.S. is the same, but it's typically reserved for civil engineers. So when I passed, my dad is like, well, you're an engineer now, you have to start your own company. I was like, what are you talking about? Like, what do you mean start a business?
I work at Microsoft and they have couches in the offices, and why would I leave that?
Right. Yep. So I decided to start a company, and I started a company, civil engineering, basically to do some of the consulting services that I was doing for, Fortune 500 companies. So the consulting company I was doing, I was leading those projects, basically saying, well, I could do the same thing charge less and just keep all of it for myself, and it'll be 2x what I'm making now. This is gonna be easy. Obviously, it's not easy in terms of starting.
Yeah.
I started,
sure.
and that experience, I was able to build. I go to a first client. That client says, those services are great. I don't need any of that shit. I have this problem. And there was a healthcare related issue, basically insurance and health. And basically, he said, "Can you guys build this?" I was like, "Sure, we can build that," which became a product technology company. Right, and at the time, there were no product technology companies really in Puerto Rico. Was a thing, but I had built products, Microsoft. So I was like, "Oh, how hard could this be? I'm no product." And that first company, the AP and everything they created worked. But then I made the huge mistake of thinking I needed a co-founder to partner with, because I was the engineer and I needed somebody that knew business so that I could kind of move it forward. And that individual ended up sort of defrauding me, the company, and it was like this whole bullshit experience. And it really was that experience which made me, think, wow, this is just terrible. I had done a lot of workshops, I'd done a bunch of things around entrepreneurship and was learning before I launched my company. So I thought I knew what I was doing, and I didn't. And my parents had told me, "Hey, look at this and look out for that." And I was like, no, I got it. I'm good.
Yeah, well, it goes to how you started the podcast. You don't know what you don't know is what you said.
You don't know what you don't know, which we tell founders, right? And that's where that comes from, right? That experience of like, I'm an engineer, I've done this, I've done all this product, I've done all over, the Caribbean and the US, all these projects. I've led teams, I have all this workshop. So clearly, how hard could it be, right? Boom! I got super hustled by this guy, and I didn't even notice because I thought I was signing the checks, right? So I'm like, oh, there's clearly endless amounts of money, but then there's obviously now, it still feels so stupid to say, but wires, debit cards, loans, signing for things, and all that stuff he did. So basically, that experience informed, well, there's all this stuff that no one tells you. It was never covered in any of these workshops. Right? So all this stuff on how you build businesses and things to look out for basically was all bullshit. At least it was the feeling I had. So I decided to share the stories and build programs and workshops that were best in class. That's how I got involved with Startup Weekend, right? And actually building something out of nothing and figuring out how to build a team. And then as we were building ecosystem stuff so that other companies didn't have to go through all the crap I went through, right? That's how I got into, well, what is best on the planet? And that's when I heard around 2007, 2008, heard for the first time, after I had gone to Microsoft Come Back, that there was this magical place where people helped each other for no reason. And, they gave you money to start companies called Silicon Valley. And I heard it from my partner at the time, another partner I had after, Marcos, who had come from Puerto Rico, done Stanford, done that world, and he was there for the nuclear winter, and he came back. So we met up later, and he told me that existed. I didn't know that existed. And I was like, that can't be. So we started collaborating, like, well, what's the good stuff? And he's like, well, there's this thing called, This Week in Startups. And we can actually do, I can actually connect with like Jason, and we can actually do like pitch events and things here. So that's kind of how that started, in like a room similar to like this, just a few people, us sharing kind of what we had learned, and then started doing kind of workshops and events, all with the idea of we need to build community. There was no community. There was no mentors. There was no investors. There was literally nothing in Puerto Rico. With that kind of experience, there were a lot of things happening, but they were not effective because you didn't see product technology growth companies from Puerto Rico. And I had done it on that first time around, and then I did it again after. So that informed the start of what became all the ecosystem work. Is I called Adele, right? The story for Adele was, everywhere around the world is around policies sort of top down, right? Like someone says we need tech ecosystem or whatever, and they do investing.
In the government says that.
In the government says that, or some corporates or individuals. There's some company and they become investors. So there's something there, right? It's like you start ecosystem in Buffalo. It's not like there isn't anything. There's like big companies. There's executives. There's something. So you start from there and say we want to do X. But in Puerto Rico, it started from grassroots. There wasn't anything. There weren't any companies. So just people getting around the table saying, we're going to build something out of nothing. And we had, right? We saw those first steps. So I pitched Deo. I say, Deo, Founders Institute is super early, and we had seen them kind of around the world. Could you, help us launch in Puerto Rico because there's no, we want to see what can happen if you grow and you attach programs and you grow up. Like, so what does an ecosystem look like to be built from the ground up? And for context, globally, at this time, Startup Weekend, I was the only Spanish-speaking facilitator for Startup Weekend, which got acquired by Techstars Startup Programs. So at this time, this is 2009, 2010, Dominican Republic, Colombia, all those places, they hadn't even really come online or started.
So Puerto Rico is pretty much the first in the Caribbean.
We did.
Spanish-speaking.
We did, and we knew because we had some friends from those regions, and they reached out to do Startup Weekend after. So after we did Puerto Rico, we did Dominican Republic and Colombia and a bunch of other places. And Santiago Zavala, 500 startups in Mexico City, super active, just going everywhere. So we were growing and training everyone else, right? So that story that we had in Puerto Rico for growing the ecosystem can happen elsewhere. But Adele said yes, right? So Adele said, okay, let's do it. You guys have your stuff together. You guys know all the mentors. And when we got those mentors together, it was the first mentor network that got together for supporting companies, right?
In Puerto Rico.
Which is great. Yeah, which is crazy. You're like, seriously? Like, we just got here, right? We're just getting started. And you're saying we just did a mentor network.
It's interesting that this was such a revolutionary idea in 2008, 2009, and it's amazing that you don't need the internet to create a mentor network.
Right. And the mentors network, it's not that there weren't different ways of mentors and things like that. It's just that the mentors themselves did not have the kind of experiences that you need for startups, right? You had something called SCORE. So the Small Business Administration always has something SCORE. Great resource, great work for other businesses where they use retired executives, right? But that's something we did not know then. It's obvious now that you're not going to get
to your point,
exec to run your growth team.
It's a different style of building a business, right? Like the Silicon Valley model, the way you build everything we teach founders is very different than what universities SCORE, a lot of these other mom and pop lifestyle, old school, write a 50-page business plan institutions teach. And
I did that.
That is revolutionary.
Yeah. I wrote the 100-page business plan the first time for my first company, right? Because that's what you had to do. That was SCORE's advice. I'm like, I'm going to do this thing. It's perfect, man. How can we lose? We have a total marketing plan. This is great. We thought through all the costs. We knew all the service. We knew everything we were going to do. And now it's all bullshit, right? I mean,
I've had people tell me in 2018, I'm working on my business plan. I'm like, stop working on your business plan. Just build the business, and then
see what you learn. I mean, it's a helpful exercise just to make sure that you ask yourself some core questions, but don't think because you wrote that thing that you're good. Obviously, which we know there's so much fun.
All right, we got to keep moving forward because the story has a little bit more. So you level up. You join Kauffman Fellows. For those that don't know, what is the Kauffman Foundation? What is Kauffman Fellows, and why did you do it?
So the Kauffman Foundation is the premier nonprofit globally supporting entrepreneurship, right, around the world, right? So they're the first funders for the Startup Weekends around the world and a bunch of other programs. And the Kauffman Fellows program started as a program from the Kauffman Foundation to train the next generation of venture capital investors. About 25 years ago.
So it's like an accelerator for VCs.
Yeah, think of it as a YC for VC in some regard. But it is, and it has evolved over the years where it's much more of a masterclass for investors around the world. And that program spun out from Kauffman Foundation and is run by the Center for Venture Education and previously led by Phil Wickham and more recently the CEO, Jeff Harback. And that program evolved to focus on basically the best practices around innovation investing broadly, not just venture capital. So innovation investing can be accelerators, incubators, government programs, venture funds, and all angel investing. And the purpose of it is over the course of 2 years to become the best investor you can be for founders. Right? The purpose, we work for founders. So for me, the evolution of my career was clear. I was clearly very interested in tech and what the problems you could solve there. I was interested after in investing. I had a regard in sort of the angel investing side. The reason I started Founders Institute was to kind of have some kind of filter for investing. You're like, well, how do you know the companies, when they have nothing and they're starting, that they're actually committed? Not whether they're even good, it's just like, are you going to stick with it when things get really bad? And the next logical step was, and this was when funding accelerators were just sort of getting started, right? In terms of after YC, you had this idea of investing outside of the Valley around the world, right? Everything was very Valley focused, but 6, 7, 8 years ago, it wasn't. And the idea was, well, we're going to build up something for funding companies. Like we're already on that path. How do I make sure that I figure out better ways to know what I don't know around investing about myself as an investor and all these things. And I lucked out and I met, one of the events we had done between Puerto Rico and New York. We have brought portfolio companies to New York so that our friends in New York could see Puerto Rico companies. And one of the mentors there and investors, Jorge Torres, he was a Kaufman Fellow. He said, hey, you're doing all this great work. There's this program, you should think of applying. I never heard of Kaufman Fellows at all. And I was like, well, this sounds amazing. Let's do it. And I did. And Adeo supported kind of our application. Then I was just thankful kind of there in that regard. And had the opportunity to do that, to go and share with peers.
Is it through Kaufman Fellows that you built ScienceVest, right? Absolutely. So Kaufman, the way it works is essentially over the course of 2 years, there are certain modules where you meet peers and you do 3 things. You work on yourself, you work understanding the mechanics of venture capital as a part of it, and then there's a component for research. Think of it as a postdoc in terms of an area. It could be a thesis around funds, or it could be any area of innovation investing broadly, just sort of quantitative type research or anything else that you're cared about. I decided to focus on research, basically pulling together everything I had learned from early stage work with Founders Institute, and early before anybody knew that founders could actually build companies. You and I would take that for granted as when we were kind of directors, but that was heretical at the time, that you would invest time, effort, and money in someone that hadn't really built from outside the Valley, right? Think of it from outside the Valley. This is not your traditional team. And science and the funding gap and all these things. So from that research, developed the thesis that you could take companies that would not traditionally be funded because they did with deep tech, right? These are company PhDs commercializing their IP, and that this is not therapies, right? When people think about life sciences or IP, they think, oh, it's some kind of therapy that takes billions of dollars, and it's like, no, there's a new generation, new kinds of companies are getting built because of all the stuff that we take for granted for startups, and a lot of the changes are happening in life sciences around genomics and data and sequencing, and I wanted to confirm whether you could turn that into a thesis, because there was a gap for funding real meaningful companies in that regard, and that thesis, that research, which I presented to Kaufman Fellows at my graduation, became the basis of ScienceVest, which got started actually as an angel list for science. So we started doing angel investments through it, and that's how we got through the YC fellowship, right? Because we had seen the work that YC Research was doing. This is 2014 or so, 2014, 15, and it was clear that some element understood what we wanted to do, and my partner was also Latinx, right? He's from Mexico, I'm from Puerto Rico. I was based in New York. He was based in Silicon Valley. So what is that thesis?
The thesis is that to be a first check into companies that are commercializing meaningful intellectual property, solving a world-changing problem, right? And the way to do that is to leverage what we take for granted in startups, customer discovery, traction, all these things, to basically make commitments in companies that wouldn't otherwise have access to capital, that they're too early for VC,
such as
too late from grants, such as, give an example, like Avro Life Science. So there's
like life sciences, biotech,
biotech,
frontier tech, not necessarily software companies.
not necessarily pure software companies that we take for granted today. Yeah.
All right, awesome. Well, let's take a quick break. We're here with Ramphis Castro. We're talking about his journey and his fund, Science Vest. We'll be right back with more.
This is Ambition Today.
Thank you for listening to this amazing episode of Ambition Today. Don't forget to join the Ambition Today A-list to get the single greatest piece of advice our guests have ever received. The price is super founder-friendly, starting at only $3. That's syscar.co/A-list to join the Ambition Today back channel today.
Visit Ambition Today online at syscar.co and follow the show on social media at Ambition Today.
Welcome back. We are here with Ramphis Castro, and we are talking about Science Vest, his fund, investing in frontier tech. Ramphis, I love that you've built Science Vest, and to be honest, you were talking about investing in biotech and frontier tech before it was cool. Now it's becoming a little bit more mainstream. A lot of VCs are starting to do it as mobile has peaked and is starting to go down a little bit. In a little bit, I want to talk about the future of where you see venture capital going, but what would be your advice to a biotech company right now who's trying to decide maybe if venture capital is the right fit for them, or if they should just go get a bunch of grants, or what would be your advice to these companies looking for investment?
So I wrote an article about it because that specifically was the result of my research thesis. Is there is this pipeline of programs now and opportunities in how to go about both funding your companies and getting the kind of support you need at the earliest stages. Because keep in mind, when we're talking about biotech and other things, there is a well-established industry around investing in these companies. The challenges that they face is that they need to be at a certain stage before they get the support. So my advice would be specifically for, these kinds of founders that are maybe finishing their postdocs, or maybe they're working at a biotech company and thinking about starting something. And for those founders, the best resource that's been created in the US for them is actually a government program, something called the I-Corp program. And the National Science Foundation funds this program all over the U.S. Every research university has access to this program. In New York, the node is called the New York City Regional Innovation Node at CUNY. And any of them can apply, essentially for free, to get customer discovery work. And the reason this matters so much is, for these kinds of companies, they really need to figure out at least the right side of their business model canvas, right? The things that we take for granted on customer discovery, they really need that kind of feedback and support on, what problem are you solving, but for who, and you have specific feedback from them or the market. So having that really nailed down the earliest stages with, for example, they could just do Founders Institute, right? They could just do that. But the program, the I-Corp is even earlier, right? In terms of, they can just get some of the research, get feedback and support from the industry. And from there, it makes them 60% more likely to get funding from the federal government, which is the $100K for the SBIR grants, the $225,000.
So check out the I-Corp is the sort of the short.
Yeah, just check out the I-Corp, and from there you'll get access to the resources and the people and the individuals that you need to move to the next step.
Okay, awesome. I want to pivot a little bit. We've talked a lot about Puerto Rico to this point, but you're here. We're in Fifth Ave. We live in New York City now. You and I are both co-founders of a nonprofit called the New York City Innovation Collective, which helps all of the accelerators and incubators in New York by supporting the managing directors that run those programs. How would you explain, as someone who's built ecosystems, around the world, you've the Caribbean, you've been involved with Founders Institute, headquartered in Silicon Valley, you live in New York, Innovation Collective. How would you, what do you think of the New York ecosystem and kind of where it's at as a startup ecosystem?
So when I got to New York, this is now close to about 4 years ago. Yeah. And so let's say 3.5-ish years ago. And I had spent some time coming in and out. I saw that New York's this massive city, but it's massive in a lot of different industries, not just one industry, what you see in the Valley. So what I saw here was a lot of the traits that I saw globally in emerging ecosystems, which just means that there is a lot, but they don't know each other and they don't help each other, right? So the city itself, unless you're within the New York tech bubble, which is huge, within the context of the city itself, it's small, right? Because it's, tens of millions of individuals, all kinds of things. And the opportunity that I saw there was for to have more of what you have in the Bay, but here requires a wider array of people because there's more industries, more backgrounds, more inclusion, right? Silicon Valley talks diversity, New York lives it. And to do that, you need everybody to at least start to know what they're doing and get connected. So seeing that, and obviously you and I had the chance to really see what a New York flavored company feels like, because when you see the deal for the city, it's not just the core AI tech company Google style. You have the shoe design company that leverages AI for super customizing the shoes. So that requires a different kind of ecosystem as well, because you need different kinds of support, different things. And the collective is that opportunity to have the directors, like the guys at the front lines of helping founders when no one believes in them, right? Because that's been the unifying theme. Everybody talks about all this funding and investors and all these things, and I'm an investor. But when you see the numbers, it still skews, right, around 95+% to a certain kind of founder, of which I, in some regards, lucked out because I'm an engineer by training. So even as a Latino, I have access to things that some other more talented founder would not have just because I'm an engineer. That's obviously unfair, right? And obviously not that business is fair, but it's just that, you should at least get a shot, and you don't get that shot. And New York has more of that. So the collective groups all these programs in all these industries that help founders when they need it most, which is the early stages. Like once a company is at the Series B, C+, they need other kind of support and help, but they have other kinds of resources as well, and they have other experiences and team members, and they're gonna duke it out, they're gonna figure that out, and it's still gonna be bloody battle, but it's different from when you don't know what you don't know and you're getting started. So it just allows them to kind of help each other and then to build the ecosystem in that way. Because if you have more resources, everybody supporting each other, that's what we take for granted in ecosystems like Silicon Valley. And now that I see, all over the world, right? This is not a Silicon Valley phenomenon. You go to Medellin, there's an ecosystem. You go to Puerto Rico, there's an ecosystem. And the collective is an opportunity for other ecosystems that are not like the Valley to engage with best-in-class individuals and programs that are sort of been there, done that in fashion, in marketing, in logistics, in transportation, in pharma, where you don't really see at that scale anywhere else in the world.
Okay, awesome. Well, I agree pretty much with everything you said there. It's been a really interesting journey, and I think it's been the big benefactor in the Innovation Collective is startups, right? Because by connecting all the MDs, all the programs, it allows deal flow to flow in new ways, right? And so, I've had startups that have come through Founder Institute, wanted to do Fashion Lab, get over there. Like you can move the companies around so they get more help, which has been amazing.
Absolutely. It's all about the founders, right? I think what has been interesting to see how people forget over and over and over is how lonely, how difficult it is to start a company. Right, and everybody wants a piece of you. Everybody wants a piece of equity for low valuation. Everybody wants you to hire them for consulting or this or that, and they forget that everybody that starts something out of nothing. That's just not just founders; it could be artists or anybody else. They're giving up. It's their life. Right, for everybody else, they're just a client or a portfolio company or this or that. But for those founders, it's just them, right? Yeah. With everything they need to deal with, and the collective is just a way to accelerate helping, more founders get a shot and get the resources that they need. So
I want to ask one more question here before we wrap it up. But you've been on this journey, you've seen ecosystems around the world. You're an investor. Where do you think the future of venture capital is going? Is one question, and maybe where you want it to go could be another question. But what do you think is happening in the next few 4, 5, 6 years?
I think the future of the industry itself is moving towards reflecting more the diversity of the world, right?
Okay.
Like, and if you go to like a few years ago, most of the money comes from the Valley. Still in the U.S., most of it comes from the Valley. But now you have, China, Southeast Asia, and others with a big chunk of where the innovation is happening. And I think there's going to be a lot more of an expansion around that, which means that the investors will also hopefully will start to reflect the ecosystems that they come from, which will then support more kinds of innovation to happen across more areas, right? So I think broadly, that's where it's sort of going. It's not going there fast enough in the U.S. specifically for non-obvious systemic challenges in the way capital works, and we could talk about that. But broadly, that's sort of the direction. And in terms of the shape of the ecosystem itself, the funding ecosystem, I think that will shift more towards what YC is doing with the startup school, for example, right? Where any founder globally can have access to best-in-class company building training from the best in the industry, and from there be able to access the right kind of resources depending on what makes sense for them, right? So having the massification of that knowledge and those resources and those relationships, that's the direction for the founders. And the piece that's missing, which is also trending in that direction, is that there'll be more founders like you and I and others that have shifted towards investing and supporting founders, where your non-operator investor or engineer, going back to why it's so hard to invest in the kinds of companies we invest in, is that if you don't have the kind of experience at the early stages or empathy in that way for what it feels like to be a founder, founders are not going to want to work with you. Why would any founder want to work with an investor that has no clue how to build a company, how to do it? Oh, because they're a great investor? Great. There's a handful of those kinds of investors, right? And everybody knows who they are by name. If you're not that, then you want an investor that can understand where you're at, where you're going to be. It can actually be helpful in those really difficult spots when you don't know what you don't know where you're going to go, and it's still up to you. And that's the shift for the founders themselves, is that's what we all want. What they want is more of those, and we're going to continue to shift more of capital and capital people's money into those kinds of companies and opportunities.
One of the things I've been surprised by is venture capital as an industry that is supposed to be super up to speed with all the latest trends, and investing in the top technology companies. As an industry, has very poor technology. Most venture capitalists' tech stack is like a spreadsheet, a Google Drive folder, and an email box, and that's pretty much it. They take meetings and that. As someone who with ScienceVest, you built some software for biotech, and where do you see venture capital going? Do you think software is going to play a role in the next few years? So you see Social Plus Capital, who takes a big data approach, and it seems to be a huge advantage. And Andreessen Horowitz has, their shared services, and even Loeb here in New York has a shared services model. Where do you see the future going with regard to that?
I think the core challenge of, let's say, the industry, or at least for change in the industry, is also investment in the industry, right? You don't go to Microsoft and say, hey, Microsoft, let me give you more money so that you can invest in innovation, right? That's the thinking now in venture capital. Hey, venture capital fund, I'm an LP. Let me give you more money so that you innovate on the venture capital model. Not going to happen, right? You're not going to fund that. So there needs to be more capital flowing to the new funds, the different kinds of funds that are also just like startups. They need to make their investments and prove that they can do the work, have traction in their portfolios. So more capital needs to flow there so that the changes that we want to see, maybe that's more quantitative investing. Maybe it's more technology-driven in investing in terms of managing the portfolio. Maybe it's, firms that are fully distributed but leverage more technology, leveraging AngelList or other platforms. But to see that change, you need founders, GPs, new kinds of GPs that operate like founders as well. And that's a big that's a big gap in terms of the way money flows, because it's not used to doing it like that, right? We have Wall Street, and, you trust someone, you give them, $100 million, and it's a 10-year relationship or more. It is not obvious how to shift that capital to the new kinds of funds, which is why you see larger funds raising more money, right? Like literally more money.
Yeah,
right?
SoftBank and
more money going to less deals that you hear about. But then there's all this innovation that just magically came up from all over the world. Obviously, what we have is not geared towards funding the kind of broad innovation that we're seeing.
Well, talking about limited partners and the layer above venture capital is feels like a black magic, black voodoo, because just not enough people talk about it. What would be your advice, and we'll end on this note, your advice to someone who may be listening, thinking about starting their own fund? So to do exactly what you just said.
So I think absolutely is to start, right? If you have, by whatever means necessary, is, invest either your capital or some access of some of that capital to support the entrepreneurs that you care about, right? At the earlier stages. That's why there's been an increase in the micro sort of venture world. But to start, just like if it were as if you were a startup, in terms of, what are the kinds of founders you care about? Right? And be clear about that. What are the kinds of companies that you're best suited to supporting, not just investing for investing's sake. Like, how are you actually helpful to these founders? Why would they need you to help them? And figure that out and get feedback from them and figure out what's the right kind of model, what's the right kind of check size that you can actually support them with, and just get started in that regard in terms of being helpful and supportive to entrepreneurs is the way to start. And as you are successful, because they are successful, it's the only way you can be successful, then use that to share their stories for others to say, hey, I'd like to support what you're building in terms of the way you're investing. Let me actually give you and support you with some capital so that you can do more. And there's ways to do that with angel lists, like your syndicate and angel list and things like that. So there are tools and opportunities now that just did not exist even a few years ago.
Even 2 years ago.
3 years ago, where now anyone that can actually, because it's a ton of work. Right? That's the thing that you're, if you have $1 billion+ fund and you have your LPs on lock and all these things, you're not maybe working as hard as just like any other founder, that they're out there every single day figuring out ways to be effective and helpful to their founders. So that's where you start.
Awesome. Well, Ramphis, has been an amazing episode. I'm really excited that we finally had you back on the pod. Episode 50. For those of you listening, the show notes, which include everything we talked about in this episode, will be up on the website, siscar.co. Share this episode with a friend. Leave us a review. We truly appreciate it. We are going to take this over to the Ambition Today back channel. But for everyone that's leaving us here, thank you, Ramphis, for joining us. Anywhere people can go check out more? Anything you want to plug?
The core thing I want to plug, obviously, if you're a PhD founder and you're looking for support, you kind of don't know what's the right next step. Obviously, ScienceVest, that's what we care about. And the other program is Parallel 18. Which is a funding accelerator program based out of Puerto Rico for international companies, companies that are coming from Europe that want to hit the U.S., have a soft landing in the market, or Latin American companies that want to go into the U.S. It's a $40,000 equity-free 5-month program, and it has rolling applications every year.
All right, amazing. Check out Parallel 18, check out ScienceVest. Stay curious, everyone. I will see you on the next episode of Ambition Today.
Thanks for listening to Ambition Today. Be sure to visit siscar.co to get all the information from this episode and more great content. Until next time, stay curious, everyone.